solve large, intractable problems.
It's a new venture altogether.
Your brain is a wild horse there.
Because remember, writing is not a team sport.
You are not selling horse carriages when there are cars.
I want to be known only as the trusted advisor.
More like a tourist.
Play to Potential podcast.
And you see this everywhere, I spent a lot of time in the city that I was born in Delhi, but also in Bangalore, where I went to high school. And in Bangalore, I do a lot of work with Devi Shetty, the surgeon. And if you think about the story of Devi Shetty, how he's created sort of a cardiac factory of sorts, which I've been chronicling now for 14, 15 years. It's really a sequential creating the conditions to create. So his operation is premised on scale, on a lot of patients coming in. But the problem is that the patients will not come into the hospital because they live too far away, they're uneducated, they can't get away from their work, they're physically unable to get there, so on and so forth. So you've got to invest in transportation, in logistics, in medical insurance, in education, in satellite delivered telemedicine. You've got to create all these conditions. And that's not what you want to do as an entrepreneur. You want to do heart surgery and cardiac care. But to do that, you have to create the enabling conditions before you're allowed to do that. So there are lots of examples in the book like this, but that's why I say create the conditions to create.
Welcome to the 38th conversation at the Play to Potential podcast, a series of reflective conversations with leaders across disciplines on topics around leadership, transitions, and careers. I'm Deepak Jayaraman, your host and curator of the podcast series. I'm an executive coach, and I work with leaders during high-stakes transition, whether it's a role transition, leadership transition in a company, or a career transition in an individual's life. To know more about the advisory work I do, you could visit transitioninsight.com. I believe that just like businesses need to be coherent about their answers to where to play and how to win, we all need to be thoughtful about our responses to the two questions, where to go and how to grow. This podcast is an attempt at exploring how some leaders across domains have grappled with these two questions as they've gone about their respective journeys. My guest this time is Tarun Khanna, a professor at the Harvard Business School, who's been researching and teaching strategy, corporate governance, and international business for over 25 years. For several years, he served as the chair of HBS's activities in India and South Asia. I had the good fortune of meeting him and interacting with him in the context of a CEO search I was doing for an Indian company where he's a board member. He has recently written a book titled Trust, Creating the Foundation for Entrepreneurship in Developing Countries. In our conversation, we start with him reflecting on some of the choices he's made and his insights on how we can leverage some of the thinking in the field of strategy to inform how we think about the where to go question that we grapple with in our journeys from time to time. We then dive into some of the elements of the recent book and try and unpack some of the elements of how entrepreneurs should think about building trust in the ecosystems they operate in. Without further ado, let's dive into the conversation with Tarun Khanna. Tarun, thank you so much for your time and for appearing on the Play to Potential podcast.
Of course, Deepak, thank you for having me.
And we'll talk about the book that you've written, Trust. But before going there, I want to talk to Tarun Khanna, the strategy professor. And a good place to start, Tarun, might be to talk about what your pie chart of time looks like today. I'm curious about what people do and why they do what they do. But more importantly, in your instance, how have you channelized your research interests over a period of time?
So a pie chart of the way I spend my time. I would say that, of 18 waking hours in a day, probably a third of those are spent at home, attending to family issues, taking care of my kids, spending time with my spouse, my extended family, whenever possible. And the 2/3 of the time are spent on professional activities. And of the professional activities, I would say the vast majority is in my primary day job as an academic at Harvard, which is where I've been for the last 25 years as a professor, and prior to that as a student. Really good fortune to have stumbled onto being at one of the leading intellectual centers in the world today, and a crossroads of ideas. So I spend a lot of time here. And some fraction of the time is spent taking the ideas that I try to work on and develop and trying to get them implemented in practice, seeing how they engage with the world at large outside of this ivory tower, which in my case is mostly in the developing world, in the countries, of course, like India, which is my country of origin and my home, but also in other developing countries.
Tarun, I think you spoke about stumbling onto the path of becoming a professor at Harvard. I'm also curious about how people make career choices. And again, in a way, it's a parallel to, the where to play question and strategy. So what can the world of professionals learn from the latest thinking and strategy in terms of how they address the where to play question for themselves?
Look, I think that's one of the fundamental questions in the discipline that has come to be called strategy in the last, let's say, 3 decades or so, in which it's matured quite a bit and become a fairly mainstream avocation of a lot of academics and practitioners and consultants and so on. I think the core wisdom, which is to really introspect on what is it that an organization brings to the table, to the collective table, as it were, and by extension, what an individual brings to that organization, should determine the kinds of places that you choose to play in. And if it turns out that those places are not places that you intrinsically feel that you would enjoy playing in or be good at in the long run, then I think it suggests a direction of investments in your own human capital to sort of move you in the direction where you would have some unique value addition to some, some landscape, some problem space. One of my colleagues used to ask this very sobering question, which I find useful to articulate to myself once in a while. And the question was, what would happen if you just vaporized one day? Who in the world would notice? And I think it's it's obviously an existential question, and it's a to me, a very motivating question because, other than my immediate family, you have to begin to ask who would notice. I mean, in my case, I like to say that some of my professional networks would notice for some time, and then the world will move on, right? So whenever one feels that one really is achieving something, I think it's sobering to bring oneself down a notch by saying, well, if you really vanished, who would really notice? And I think for an organization also, you can apply that. You could say that, look, I'm competing in a setting, in a professional setting, in an industry, and what if my entity were to cease to exist? How would the rest of the ecosystem recalibrate itself and adjust to a new dynamic equilibrium of some sort? And the reason why I think that's not just a facetious question and not just intended to be either an inspirational or a demotivating question, depending on your predisposition, but it's intended actually to be an analytic construct, is that it's a very useful thought experiment to really help you identify what is it that you uniquely bring to the table, which I think should be the driver ultimately. The question that you originally asked, it should be the driver ultimately of where you end up wanting to play. Where is it that you can contribute something truly unique?
Tarun, before we started the podcast conversation, you mentioned citing the work of Professor Ben Jones of Northwestern University in your class at Harvard. When it comes to thinking about our careers, what can we learn from how the thinking has evolved in the field of strategy over the last several years?
Well, I think one of the things that's at least I can give you my impressionistic answer to that field as a scholar of it and a practitioner of it. I don't know that in a field as young as strategy that it's very easy to arrive at consensus on these points of view. So take it with the proverbial pinch of salt. But my own sense is that one of the dominating sort of empirical regularities with which we're confronted with more and more frequently is this idea that newer avocations, as you were just saying, Deepak, newer industries, if you want to call them that, are perpetually being created and created out of existence, created and uncreated, if you will, if that's a word. And that this is happening at a very rapid rate. And I think it's becoming more and more transparent the extent to which this is happening as a result of combination of prior insights, right? So think of it this way. There's some very interesting work done by scientists and social scientists saying that precisely because the stock of overall knowledge is exponentially increasing. By some measures, the amount of codified knowledge that humanity has added to its repertoire in the last decade probably exceeds that in the previous century, and probably in the last 2-3 decades exceeds that of a millennia before that. So the rate at which we are understanding new things is truly accelerating. And what that means is that if it's possible to think of exponents of exponents, that the combinatoric explosion in new possibilities is even more bewildering, right?
Right.
And that means that the speed with which new combinations of things that were hitherto uncombined, if you will, or things that you would not normally think of in juxtaposition to each other, are increasingly coming into combination and forming new vistas and new possibilities in different ways. And of course, each of these entails a resetting of the table, if you will. And if you're not careful, you could find yourself out of a role to play. In other words, if you apply my previous thought experiment, you could find that you may have had some unique value addition in the previous landscape, but a new landscape has emerged in, let's say, the last 5 years. And suddenly your particular calling card is no longer in as much value at this point. So, you see this happening faster and faster. And I think the underlying structural construct is that the rate at which new knowledge, and therefore the rate of combinatorial possibility, is increasing very, very fast. And there's no reason to think that that will diminish. So that's the first thing. The second regularity, I would say, which is also sort of a corollary to, and there is a guy at, I think he's at Northwestern University in Illinois, who has done a lot of this academic work that I am loosely remembering at this point in answering your question. The other corollary of this interesting finding of sort of exponential expansion of knowledge is that each of us is only going to know a smaller and smaller sliver of things, right?
Right.
Maybe you lived in the time of the sage Valmiki in India, and there was a certain set of known things, and as a truly wise man, or wise woman, as the case might be, you might expect to know, 0.1% of things that were known to humankind. I'm making this up, of course.
Sure, I hear you.
And today, with the exponential increase in knowledge, you may know, a vanishingly small number. Maybe it's 0.00001% of things. So the question is, how do you ensure that you have a unique capability to contribute, given this bewildering explosion of knowledge and the tiniest sliver of which you are a master or mistress, right? And I think that puts a real premium on being able to communicate what it is that you have to the rest of the world, so that you can facilitate the emergence of combinations with your own skill set. So that's the way I think about it. That specialization isn't going to go away, and it's a pretty straightforward and direct corollary of the fact that you have to specialize to survive, because things are developing too fast to do otherwise. Otherwise, you will condemn yourself to mediocrity. But if you over-specialize, then your ability to communicate with people with different specialties is now at a premium, so that you can raise the odds that people productively combine with you and find it useful to hang out with you and do things with you, so that collectively you will into being new possibilities.
Got it. I love the way you frame it as an opportunity to facilitate a combination of new possibilities based on what gives you energy and your uniqueness.
Yeah, and if I may say, I think this really is a mindset issue. When confronted with this sort of situation, I think a lot of people would find it. They may not confess to it, but would find it intimidating, and it is intimidating at one level. But the thing that it helps me to remember is that everybody's in the same boat. We're all trying to do the same thing. It's not like that the explosion of knowledge is uniquely disadvantaging your uniqueness, if I may say it that way. And so there's really no reason, there's no upside to being bewildered or befuddled or lost. We just simply get on with it.
Got it.
And I think that mindset is actually quite motivating, and so stop worrying about the fact that you know almost nothing.
Got it. No, I think moving from the conceptual to the real, again, the one piece I'm curious about is how people manage their time and attention. Given
great question,
back to what you said, given the infiniteness or tending towards infiniteness of the stuff that's being created and that's available. So, as an academic, how do you, again, maybe to make it tactical, Tarun,
Yeah.
email, calendar, phone, apps, what are some of the things you do which on the 80-20 basis contribute towards you managing your time and attention?
So the first thing I would say is that there's a simple guiding principle for me, right? And the guiding principle is that I would like to be known, not out of any ego reason, though everybody has an ego, but not primarily, I hope, out of ego reasons. I would like to be known as one of the key people who's thinking about issues related to creativity and entrepreneurship in the developing countries, right? That's my self-assigned space. It's a space that I like to think about. I think I have something to say. I think it's useful and productive for someone to be thinking about 5 billion of the world's 7 billion people on whom inadequate, certainly scholarly and maybe policy attention is being lavished. But the reason I keep saying that is that if I can pull that off, and to some extent I feel I have pulled it off, but to keep doing it better and better, then I become the clearinghouse for people coming and telling me things that they think are relevant to me. And the measure of that is how often do I, for unsolicited reasons, get inbound offers of collaboration. In other words, going back to the combinatorics. If a strange person, so today a strange person I'd never met before from Indonesia wrote me a very nice long note saying that he had seen something I had done or talked about or a video or a piece of writing and he thought about this and he wrote me a long essay. And, I read the essay and I say, well, this is very insightful. And, not that I have any particular desire or bandwidth to collaborate with that individual, but he is contributing to the grist of my mill of continuing to understand something about developing countries. So if you're the clearinghouse of something, then the world comes to you. It makes it a lot easier than you chasing around the world looking for things. So that's the first overarching principle, that just become the clearinghouse of something. And this goes back to the specialization point. In terms of the tactical, I don't know that I'm even above the median on being wise about this. I'm trying to think now in real time, what is it that I could say that doesn't sound utterly silly about rationing my time. I hope this doesn't sound egotistical, but I think once again, the clearinghouse. If you do have something to say that's valuable, then I think you'll find that people will be willing to adapt to you to some extent. So in my case, the way it works is because I'm physically resident in Boston, in Cambridge, Massachusetts, most of the time. And my work is in disparate locations. About half of it is in India and China, and the other half is scattered around the other developing countries in the world. That it's not possible for me to be physically immersed in the phenomenon that I want to study 24/7, which is professionally what I'd like to be doing. I can't do that because then I don't have access to the intellectual infrastructure that enables me to make sense of those things. So that's the dilemma. So what I am able to do to some extent is as a typical example, is to show up in a place, let people know that I'm going to be in this place from time A to time B, and simply, in effect, allocate the time to different projects, different causes, different events that I might want to participate in, always with a view to saying, am I adding something? Am I bringing something unique to the table? Am I meeting new interesting people? Am I giving the opportunity for others to come and engage with me? And of course, as an educator, am I educating people who otherwise I may not have a chance to reach when I'm sitting in Cambridge, Mass? So that becomes the allocating mechanism. I don't know that I have anything wise to say about devices and emails and phones and so on.
Sure.
These days it just seems 24/7, so it's hard to know how to quite set that up. When you figure it out, let me know and I'll adopt it.
Lovely, Tarun. I think why don't we dive into the book? I read your book Trust with a lot of interest. Maybe let's start with why you wrote the book.
So my sort of, as I said, self-described intellectual quest is to understand the contours of entrepreneurship and creativity in the developing countries of the world. And since I was born and grew up in India, India for me is ground zero, is the laboratory where I can go to think about things and then see if they tend to make sense. And if they do, then try it out in other places and learn from the variation in the way those experiments unfold. That's my modus operandi, if you will, from a research standpoint. For me, the book was really an exercise in taking stock. It's been 10 years since I last wrote a book that was more sort of a travelogue book. I wrote a book in 2008 called Billions of Entrepreneurs, How China and India are Reshaping Their Futures and Yours. And it was a set of personal reflections grounded in history and grounded in my personal experiences in off the beaten path in China and India, particularly in rural China and rural India, so staying away from the big cities. And I thought 10 years after having engaged in a variety of other, if you will, intellectual and personal experiments, including building companies and nonprofits in different places, I thought it's a good time to reflect and take stock. So the book Trust, Creating the Foundation for Entrepreneurship in Developing Countries, which is just out, is a set of essays that reflect on 4 or 5 themes on why I believe that trust, cultivating trust, has got to be part of the central objective function for an individual who seeks to create impact at scale in the developing world. So think of it as a marker in my continuing journey of understanding this process of creativity and entrepreneurship.
Got it. And you talk about entrepreneurs in developing markets having to create the conditions to create. Talk to us about what's the nuance here and why is the issue pronounced in developing markets?
Sure. So that's a sort of pithy phrase that I came up with to think about. So as you know, I'm an academic at Harvard, and one of our most famous graduates is Mr. Zuckerberg, he of Facebook fame. But so the way I like to say it in public events is to say that building an enterprise in the developing world is not like building Facebook in the Harvard dorms, right? You think about it. I'm sitting here doing this conversation with you, Deepak, from the Harvard Business School. We are in the middle of a dense ecosystem here in Cambridge. Imagine a lady in the Harvard dorms here at HBS coming up with an idea. She has access to some unbelievable supporting infrastructure. There's pools of risk capital that are used to taking risks, that know how to measure risks, that know how to deal with the unfolding of risk in different ways, that know how to price assets in that environment. There are intellectual property experts and lawyers who can value intangibles in ways that we just don't know how to do in the developing world because we don't have the experience sets yet. There are so many universities pumping out talent in different ways. You can always find someone who's willing to work on your startup who has a different skill set that complements your own. There are logistics providers, there are consulting firms at every level of sophistication. There's bankers of all sorts who specialize in big amounts of money and small amounts of money. There's arbitration specialists. There's bankruptcy specialists. There's an array of people who are just there to essentially create a foundation on top of which you can do your startup. Now, go to Bogota or go to Bangalore even. And I'm very active in Bangalore as an entrepreneur myself and as a provider of risk capital. And you're an entrepreneur that, unless you're doing some very specific things for which the infrastructure exists, by and large, none of these conditions that I mentioned really exist to the depth and sophistication that you'd like it to. So it falls to the entrepreneur to either choose the very circumscribed set of things that it's possible to do with that de minimis infrastructure. In other words, you stay away from many things, which is not optimal from society's standpoint. Or you take those things on, but then it's incumbent upon you to compensate for the absence of all these supporting institutions. So this compensation for the absent soft and hard infrastructure is what I refer to as creating the conditions to create. And it's an onerous ask for the entrepreneur. But that's a fact of life. And I think you're better off recognizing the facts of life than sticking your head in the sand ostrich-like.
Got it. And what does it mean in terms of leadership, right? Again, how does a leader, again, if you looked at the prototypical leader in emerging markets as compared to the leader in developed economies with deep a support infrastructure. What have you observed about what leadership muscles they need to have in addition to what their counterparts in the developed markets have?
So I think there are lots of people who specialize in characterizing the contours and characteristics of leaders, and I'm not one of those experts. But let me provide a more arm's length characterization to some extent.
Sure.
My feeling is that a leader, particularly in the business world, there's a very famous saying attributed to Milton Friedman, the economist from University of Chicago, won the Nobel Prize, saying that the business of business is business, right? Mm-hmm. In other words, if you're a businessman or a businesswoman, you should, the best thing you can do for society is to forget about society and just get on with making money. Because if you do it really well, that's your contribution to society. There are other people who will take care of other things.
Right.
There are doctors who are taking care of the sick. There are teachers who are taking care of kids who need to be educated. There are social service workers who are taking care of those who are down on their luck, and so on and so forth. But what happens when you go to most of the world and none of these conditions are available? Then I think at a very practical level, this admonition from Professor Friedman falls on its face. It cannot be that the business of business is purely business. The business of business, in the interests of business, in the self-interest of business, is to engage in my view, in the partial private provision of so-called public infrastructure. Let me elaborate on that. What I mean by public infrastructure is infrastructure that you put out there, you can use it, but other people can use it also. A road is your canonical example. Public security is your canonical example. The fact that there's security and you feel secure doesn't detract from somebody else's sense of security in the same ambiance, right? Economists say that such things are so-called non-rivalrous. In other words, my using it doesn't diminish its utility to you, or its availability to you. Now, who is going to provide these public goods, these support services that help creativity, that help entrepreneurship? We could point fingers at the government, and bemoan its corruption and its venality and its incompetence and whatever else you want to complain about. And some of it is true, and it depends on obviously place and time and setting. But by and large, it's neither here nor there, is my very practical point and admonition to all of us. What's the point of pointing fingers? Why don't we just get on with it and find the people within the state apparatus who are willing to work on constructive things, are willing to extend a hand to the private sector and to work with the private sector. And I'm convinced that they exist in every single society. It's only a few bad apples that give the public sector a less than glowing reputation in many instances. And work with them to help them to create the conditions to create. And if that means that a private entrepreneur has to contribute to something that the public ends up benefiting from, I think that's just fine. And it's often in their own private interest, because the acid test is, are you better off as an individual, as a private business person doing this? Or are you better off sitting on your hands and saying, that's the task of the government? The latter is almost never true. The former sometimes is.
So when you talk about enlightened self-interest as well in the book, right, in the context of,
that's right.
I think you take the example of Charles Shaw and the way he shared IP.
Yeah.
Do you want to talk about that for a minute?
Sure. So Charles Shaw is a colleague, a friend who I met some years ago, and he was a former entrepreneur, actually in the tech industry, from originally Taiwanese, worked in Southern California, and really got fixated on this problem of contaminated milk poisoning in China back about 10 years ago in 2008, and realized that all the solutions the government had put forward, better information, more education, severe punishment, chastising, public shaming, none of it had really worked. The number of people who got to touch milk from the time that it came out from the cow to the time that a child consumed it was far too many to police, and too many ways to make mischief, and people were adding these contaminants that made the milk look as though it had a higher protein content, but actually were chemicals that damaged the organs of kids and immune-compromised patients. So he decided that he would come up with a technology-based solution to tracking each and every cow, to making sure that the care of the cow was individually customized to the cow. And he had this feeling that his objective was to generate happy cows. And then he had a lot of measurement systems in place to say that happy cows clearly deliver something like, 20% more milk than if you take the same cow and put her in a conventional dairy setting where you don't have all these customized sensors and so on, collecting data and customizing the feed and robots that clean the cow poop away and what have you, and very pleasant cow sheds. If you don't do that, the productivity goes down. Very simple, ultimately an economic argument. And to cut a long story short, the main constraint that emerged to his growth of this successful farm that he created was that dairy farming was never sexy in China, still isn't. And he couldn't find techie people from the big cities to come and work on his techie dairy enterprise, because it was much cooler to go work for Alibaba or Tencent or do WeChat or something like that. So his gimmick was, let me just give away the IP. Now, why give away the IP, the intellectual property involved in creating happy cows in a tech-enabled dairy farm? But the idea was that somehow, if a young person graduating from a reasonable university came and saw only Charles Shao as the maverick doing this, one could imagine that they would have some trepidation in banking their careers on Shao's efforts. Whereas if they saw that, oh, look, there's a dozen farms or 20 farms or 50 farms or a mini industry setting that's doing it, maybe my career is not hostage to Charles Shao and his situation. So essentially by giving away the intellectual property to the horror and chagrin of his financial backers, he was able to begin to attract some tech talent to come into the tech dairy industry in a way that then alleviated to some extent the constraint, and he began to grow. So this giving away of IP precisely in order to foster an ecosystem in which talent came in to then help him to grow the core enterprise so that he became a smaller piece of the overall pie, but the pie was immeasurably bigger, is sort of the essence of creating the conditions to create. So that's why I like that example. And you see this everywhere, I spent a lot of time in the city that I was born in Delhi, but also in Bangalore, where I went to high school. And in Bangalore, I do a lot of work with Devi Shetty, the surgeon. And if you think about the story of Devi Shetty, how he's created sort of a cardiac factory of sorts, which I've been chronicling now for 14, 15 years. It's really a sequential creating the conditions to create. So his operation is premised on scale, on a lot of patients coming in. But the problem is that the patients will not come into the hospital because they live too far away, they're uneducated, they can't get away from their work, they're physically unable to get there, so on and so forth. So you've got to invest in transportation, in logistics, in medical insurance, in education, in satellite delivered telemedicine. You've got to create all these conditions. And that's not what you want to do as an entrepreneur. You want to do heart surgery and cardiac care. But to do that, you have to create the enabling conditions before you're allowed to do that. So there are lots of examples in the book like this, but that's why I say create the conditions to create. And it requires that particular mindset to be able to say, it's a mindset change, right? That, of course, my core skill is going to be in developing happy cows for more milk, or in doing cardiac surgery very efficiently and cheaply for poor people. But to be able to do that, I have to have mindset shift and say, it shouldn't be outside the remit of possibility or beneath me to think of ways in which I can either create these conditions myself or catalyze others to do it along with me. And that requires sort of perhaps a more eclectic model of leadership than you would when only specialization was adequate.
This is your host Deepak Jayaraman. I'm reminded of my earlier conversation with Arun Maira, former member of the Planning Commission of India and former chairperson for BCG India. He spoke about the distinction between leadership in an open system versus a closed system.
To a more open world.
In the 90s.
I'm talking early 90s. We are a much more open world. And in this world, we need to partner with or work with organizations who are in other parts of the world. And also we are finding, because of, as you said, the world is more dynamic and information technology even then is enabling us to be in communicating with partners outside our boundaries. How to be successful in a more open world?
while Arun makes this point in a different context, the key insight for me here is that at some level, we need to look at the system we are operating in and solve for the system as a whole. Bringing it back to what Tarun says, as an entrepreneur, if I just solve my piece of the puzzle, the jigsaw is not going to complete itself. I need to work on some of the adjacencies as well for my business to flourish. I hope you're finding this content purposeful. Just a quick note on the podcast. If you wish to be intimated when more content is uploaded, please sign up on the website playtopotential.com. If you want to listen offline, it's available on Google Podcast Player, iTunes, Stitcher, Savan, Spotify, and most of the platforms. If you find the content valuable, please do take a moment to rate and review on iTunes. It will help others discover the content. Now, let's get back to the conversation with Tarun Khanna. And picking up on a similar theme, Tarun, you spoke about Narayan Hridalia. The other thing that struck me was, you talk about that lady in the reception who needs to make a snap decision on how to price a certain patient, right? And based on often limited data and real-time data. So again, back to your point about let's say developed versus developing. Do you have an insight on how decisions and judgment calls need to be made? Is there a different paradigm in the way choices are made in some of these entrepreneurial companies?
So I wouldn't say it's a different paradigm, but I do think there are some differences. I think there's always a balance between data and intuition. And in the HBS classroom, I often tell our students, our young students, at the beginning of their careers, look, you get these case studies that we use for our instruction. They're very neatly packaged. They're 10 pages, 12 pages, 15 pages. You read them, you think about them, you come in, you debate, you're masters of the universe, in effect, at that particular moment. But when you go in the real world, the parallel decision that you're confronted with at all times, right, is how much time do I invest in gathering data? Because you will never have enough data, right? At some point, you have to develop the intuition for saying, okay, the whole situation is uncertain, it's unfolding rapidly, but I can't keep investing my scarce resources in getting a better and better delineation of the problem. I've gotten enough, let me try and experiment and go on. And I think what happens in the developing world, because you're generally operating in what I would characterize as something closer to more of a data vacuum than a surfeit of data, you have to have those intuition muscles much better honed. And part of again, going back to creating conditions to create, part of the conditions that you have to create is an environment of some alleviation of data scarcity, which again requires resources. So there's a judgment call as to how much time you spend on this.
I think the other question, the other piece that caught my attention, Tarun, was the point in the book about how entrepreneurs should think about pricing versus market share. And I loved the metaphor of the Titanic, rescuing people in the Titanic, of either you take a lifeboat or you call another ship. Mm-hmm. So I guess what I took away from it was, sometimes it's tempting to keep prices down and go for market share, but sometimes there's a bigger case to keep the prices high, make it attractive for the others to come in and expand the overall pie. So talk to us about what's the insight here.
So you're referring to the chapter that I wrote in Trust on microfinance, where I was comparing and contrasting two different microfinance ventures that I know reasonably well. One was what is today called BFIL, Bharat Finance Inclusion Limited, but then was called SKS Microfinance,
right?
Headquartered in Andhra Pradesh at the time, with Banco Compartamos, which is a Mexican microfinance firm. And the unique thing about both these is that they're both publicly traded entities in their respective stock markets. In Mumbai, in the case of SKS, I'll refer to it with the name at the time of the vignettes that I describe in the book, and Compartamos in Mexico. Now, both these companies are for-profit enterprises, and they are avowedly and explicitly and unashamedly so. And in both cases, I think the logic is very much, look, we can be a non-profit enterprise, in which case we would take any and all surplus that we create, economic surplus that we create, and distribute it completely to all the stakeholders. But it will compromise the extent to which we're able to reinvest in the business and grow the system to serve the tens of millions of mostly women, poor women in these countries, who desperately need access to cheap credit. Now, in theory, the state should be providing that through subsidized loans and so on. And certainly in India, we have any number of state-run programs and subsidized credit available from the government. The problem is that the market speaks pretty loudly, that when you have a well-functioning microfinance firm competing with the state-run self-help groups, the poor women choose to go to the well-run microfinance firm because there is frankly less corruption involved in the dissemination of funds from there. And even though the nominal interest rate seems higher, the de facto interest rate is much lower when you go with a well-run, reliable, professionally run, ethical microfinance firm. Whether it's for profit or not is a separate issue. Whereas if you go with a state-run entity, sometimes the lender is there, sometimes they're not there. There's side payments demanded. There's other unsavory action that goes on that I don't want to go into on this podcast, and so on. So the women vote with their feet and go to the for-profit entity. But the key point is that both entities, Comportamos in Mexico and SKS in India, both decided that they would prefer to grow the overall pie. Now, there is a big distinction. There's still, a lot of daylight between the extreme position that you should give away all the surplus and the proposition that you should reward employees and shareholders also. There's a degree to which you would reward people. And here, I personally, for full disclosure, I should say that I've been an independent director on the board of SKS for some time, since before it became a publicly traded enterprise. I'm much more comfortable with the SKS approach, which is to say, let's make sure that we make a healthy return, that we return money to the shareholders, that we treat the employees really well, make sure they're compensated fairly, go out of the way to equip them with the latest technologies in different ways to do their job well, so that they can build on the reliability of being there for the poor women when they need it. But then make sure that you also consistently and steadily pass on more and more of the gains of continuous improvement and innovation to the poorer women in the form of a lower and lower and lower and lower and lower interest rate. Right? And that's what we've delivered. We've delivered year after year after year, other than one or two hiccups recently with demonetization. Quarter after quarter, our interest rate keeps on going down. Comportamos has taken a different approach. It said that we want to keep our interest rates pretty high. So our interest rate at SKS is, I want to say 19% and change, which is probably the lowest of any microfinance firm in the world. That's pretty amazing. And it is an explicitly for-profit firm. So it's able to square the circle, much like Devi Shetty can square the circle of saying, I want to be a for-profit entity, but I want to make sure that I serve the poor and ensure that nobody is turned away who has heart disease or tertiary healthcare needs. So also I think that SKS, now BFIL, is able to square the circle and say there is an intermediate position where you can return capital to shareholders so that they keep reinvesting and growing the pie, and you can keep serving the poor people. I have no problem with this. Comportamos is, to my mind anyway, privileging the shareholders much more than I would like to see happen. But, that's between them and their customers and their ecosystem. So again, I'm not in the business of value judgments there. And again, the market speaks there because they're growing in a very healthy clip, and women continue to go to them to borrow money and are quite happy with their services. Sure. That's the nature of the trade-off. Can I just add one thing, on a personal note? I'm a teacher, an educator, and a researcher. So I take every opportunity to use these materials that I've been studying and working on and bring them into our classroom environments, wherever I'm teaching around the world. And one interesting thing about both these instances of Devi Shetty's Heart Hospital and of microfinance firms around the world, right? If you pose the simple question to, let's say, a classroom of 100 undergraduates or 100 CEOs of companies or 100 policymakers in any country, and you say, how many of you think that it is absolutely and categorically unethical to make money by selling services to the poor. That's one extreme position. The other extreme position is how many of you have no problem at all saying that as long as you follow the law and are ethical in all possible respects, in letter and spirit, if you can make money by selling to the poor, you have no issues with a company being very profitable. So two extreme positions. And I tell the students that they cannot hedge their bets. They cannot be both. They cannot be in the middle. You have to choose one or the other. The split is invariably 50-50. No matter who you pitch this to, it will be 50-50. So it appears that all of us, my hypothesis as an academic is to say that we appear to have evolved pretty hardwired notions in our heads of what is legitimate and not legitimate to do with catering to the poor, bringing the market to serve the poor. And again, I say in my class that it's not for me to make value judgments. I wear my heart on my sleeve, and my actions tell you where I stand on this debate. But if, you and your God have a different answer, then, God be with you. Go for it.
But it's interesting that you say that across different
cultures, across ages, across cultures, across backgrounds.
That's fascinating.
Roughly 50-50, give or take. And and further, there's no, and I also say in these classes that, look, my job here, given that these attitudes are so ingrained by the time you show up in my classroom or in my circle, I have no hubris or arrogance that I'm going to persuade you to change your mind. I just want you to see that there's another side and that there are good people on all sides of this. And I think that mutual forbearance and tolerance can go a long way in civilized discourse.
Got it. Just bringing it back to the work you do in strategy, Tarun, given your thinking around the notion of building trust, what's the difference you see in how entrepreneurs in developing economies frame the strategy question as compared to some of their counterparts in developed economies? Is there a difference in the way they should be thinking about the problem?
So you asked two questions. The answers are different. The first question was, is there a difference in the way entrepreneurs in the developing world frame the problem compared to those in London or Boston? And the answer is no. They frame it the same way. However, I think that's a mistake. I think the entrepreneurs in the developed world should privilege trust as being a central co-objective of whatever it is that they set out to do. That's the reason I wrote the book. And that's the reason I wrote it in a narrative style as opposed to in more academic jargon, because I'm trying to reach would-be entrepreneurs or would-be investors to recognize that cultivating trust should not be an ancillary avocation. It should be absolutely central to the enterprise. And in the book, I have a chapter, which I think is probably the most interesting chapter to me, that's called The Mindset Change. When I was going through classes at HBS and at the Harvard Economics Department, there was a very strong and continues to be a very strong ethos, which is with good foundation, to say that you should, quote unquote, stick to the knitting. You should only focus on what's core to your enterprise and so on and so forth. There's a lot of logic to it, and it's not hard to see why, which is don't get distracted. It's tough enough to do something world-class, and you shouldn't be distracted. However, I think it's bogus advice for the developing world because it's not practical at the end of the day. As I said at the outset in our conversation, at a practical level, if I want to do something that's remotely scientifically sophisticated, even in Bangalore, right, I quickly hit roadblocks, which is up to a certain point, and within a few pretty narrowly constrained domains, I'll be able to make progress. After that, I will rapidly find that I don't have the skill sets around me. I don't have a dense enough pool of talent around me. I don't have people who can converse in the scientific language. I don't have intellectual property sophistication. I don't have common law precedent to help me. I don't have a variety of functions of intermediation that I need to make that happen. So I have to do something that is not my core, which is I don't want to be an IP lawyer or an IP valuer. I don't want to be an educator about intellectual property in that particular example. So it's not my core competence, but I have to do it because without creating the conditions to create, without the mindset shift that allows me to say, left brain, right brain, I've got to do this and I've got to do that, you're essentially sunk. Or to put it differently, your enterprise may very well be profitable and so-called successful, but it's not likely to have impact at scale. And by scale, just to fix numbers, I'm saying, let's say we want to affect at least 10, 20 million people at a time.
Mm-hmm.
So I think that's what should be done differently. Is it being done differently? No, because people are sort of mechanically aping what is happening I'm guessing this is why it's happening. People are mechanically aping what we're teaching in a strict US curriculum or a curriculum in Europe, and translating it without thinking about the underlying logic and how the contextual circumstances are different in Johannesburg or Jakarta.
This is your host Deepak Jayaraman here again. While Tarun makes the point about baking trust in the objective function when it comes to entrepreneurs in developing economies, a similar insight came up in a different context during my conversation with Ravi Venkatesan, who happens to be an HBS alumnus. He spoke about the criticality of trust in a world where the gig economy has made it possible to get things done through these platforms where gig workers aggregate. He spoke about the criticality of building trust and how people sometimes don't build that transaction cost in the economics of business.
In this lower and lower transaction costs idea is at some point trust also deteriorates. And then the transaction cost curve starts going back up. You know what I mean?
Yeah, exactly.
So
Discovering,
if people don't trust each other, then the transaction cost to establish trust will also start rising. So I think we're reaching a point where there may be that the inflection where it starts climbing again, and then we'll have to find some new equilibrium.
At some level, the insight from Tarun is similar. The higher friction and the greater transaction costs in emerging markets need to be acknowledged and systemically solved for by the entrepreneur. Just focusing on your business alone may not move the needle when it comes to impact at scale. Now, let's get back to the conversation with Tarun Khanna. But back to the point about what gets measured gets managed, and especially if you've taken risk capital and you have VCs following you and who set metrics, what have you seen about measuring trust? Again, not to make it too numeric, but what are some of the insights around how an entrepreneur could calibrate himself or herself on whether they're doing enough to build trust in the ecosystem as they focus on their core business as well?
So before I answer that with a partial and unsatisfactory to me answer, let me address just a side comment about risk capital and VCs. I think one of the reasons it's very hard to do what I'm advocating must be done is that it itself requires an ecosystem change. You're absolutely right in saying that the conventional VC, and I've got a lot of VCs and private equity guys invested in my various ventures. By and large, I don't find them sufficiently thoughtful about the different realities in which these businesses are being built. Or to put it more charitably, what they end up doing is finding those very narrow, circumscribed segments within which the necessity to create conditions to create is relatively less. In other words, some sectors require less infrastructural support. They're relatively easier to pull off. So you find risk capital going into there. And I don't blame them because that's the quickest way to make a buck. But if they were to recognize that to build other kinds of ventures, right, including for-profit ventures, that additional metrics would be needed to recognize the centrality of trust. That's a long conversation with the venture capitalist or the private equity guy who typically has a fund structure where he's got limited partners and their money needs to be returned in X years. Right. And essentially he's forced to start, from the standpoint of the entrepreneur, behaving not in the best interest of the enterprise when his fund is due to be retired. There's no structural fix around that particular constraint. So the VCs are, as much a source of the inertia in the system as many of the other actors. So that's one comment. Let me turn, Deepak, to the measurement of trust, because it's a hugely important issue, one that I've thought about and I'm thinking about a fair bit. I don't have any silver bullet answers, to be perfectly honest. The one thing that I can say is that in all the vignettes and stories that I profiled in my book, one thing that's clear is that when you are communicating this ethos of trust, it almost always suffices to do it in the initial term for one category of stakeholder. In other words, there appears to be some sort of human level reassurance that people draw from, let's say, the fact that your employees really trust you and your turnover rates are extremely low, right? Lower than you would predict by the kind of industry that you're in or the size of business that you are, for example. So the rest of the stakeholders in the system, potential collaborating partners, providers of capital, etc., seem to draw a lot of human level reassurance from the idea that, that there's a critical bunch of people who trust this guy a lot, enough to stick with him, and maybe the attrition rates are significantly lower. And so there must be something more to the enterprise than what's showing up in the P&L and balance sheet. So let me also take a leap of faith. Therefore it's not, a corollary to that is that it's not as difficult to create this ethos of trust in the entire stakeholder system if you just get started, if you just get up and get on with it. Right. So that's one issue. And the second corollary is that in principle, one could measure these things, though it's a tricky exercise. As an academic, I don't know how to write a rigorous paper measuring this because, I don't know how the econometrics would work out. But at a practical level, as an entrepreneur, I don't think it's that hard once you put your mind to it. And once you recognize that the cultivation of trust should also be a central co-objective of your interest in creating a venture that impacts its scale. Once you do that, you can start with a single stakeholder, whether it's providers of ideas, providers of capital, providers of talent, cultivate the trust with them and use that as a de facto signaling mechanism to other stakeholders. This is how you can go about it. And those things can be measured a little bit better.
Very interesting. Tarun, just wrapping up, this has been an enlightening conversation. This podcast series is titled Play to Potential. And I talk to people from different walks of life on their perspectives on the two questions, where to go and how to grow, which are quite parallel to where to play and how to win. So net, for the listeners of this podcast, your insights that you want to leave the listeners with on these two questions?
Boy, Deepak, that's open-ended. So I would say, I have the accidental good fortune of being at the crossroads of ideas. So I'm obviously answering this from my peculiar vantage point. But to me, it seems like and even when I'm in, my home in New Delhi, or my offices in Bangalore, it applies as much there. The sense of, multiplicative or even exponentially growing possibilities is just hard to get around. And one has two choices: to be bewildered, sort of like a deer in headlights, to caricature for a second. And the other is to just embrace this sense of the unknown and to embrace the beauty in it, the possibilities for imagination, all this amazing stuff that is unfolding in front of our eyes. So my admonition to all your listeners, to my colleagues, collaborators, mentors, students, my children and younger people in particular, is to not be afraid of the unknown. As the cliche goes, you've got nothing to fear but fear itself, and just get on with it.
Lovely. Tarun, a pleasure talking to you. Thanks so much for making the time.
Deepak, very grateful for your time. Have a good rest of the day.
I hope you found the conversation purposeful. As I was reflecting on this conversation, I couldn't help drawing parallels between what Tarun said and my little enterprise in a limited way. I started the podcast as a passion project a couple of years back, where I felt that it would be a great opportunity to learn from various peoples and their journeys and share it with the world at large. People would often ask me about the commercials of the podcast and whether it's making revenues. The short answer to that is no, or not yet. But a couple of weeks back, something interesting happened. I signed up to work on a coaching assignment with a client after a few rounds of discussions. I started by asking, why me? And it was very interesting to hear what the client said. They mentioned that listening to a few of the podcasts gave them the comfort around who I was, why I was doing what I was doing, and my capabilities. Now, that was not the stated objective for me when I started out the podcast. But now when I juxtapose that with the insight from Tarun around building trust in the objective function, I can begin to appreciate the significance of doing something that may feel like a distraction in the context of the business you're building, might even be hard to measure in the short term, but I'm beginning to see the value of building an intangible asset of trust that you slowly build over time that eventually comes back to aid your core business. I guess a similar point comes up in a different context in the work of another Harvard professor, Clay Christensen, in his book, How Will You Measure Your Life? He says that we are often tempted to allocate the next unit of time towards things that gives us measurable outcomes in the short term, and that leads to people over-indexing on work and under-indexing on family. Resisting the short term, taking the long-term view, and building trust with the ecosystem you're in, I guess is counterintuitive but value additive in the long run, whether you're an entrepreneur in emerging markets, a gig economy worker, or a professional that's balancing work and family. I look forward to having you at one of the subsequent conversations of the Play to Potential podcast. Signing off, this is Deepak Jayaraman here. To know more about the coaching and transition advisory work I do, please visit transitioninsight.com. Bye now.